The headlines are screaming about a new ceasefire agreement that has finally pushed mortgage rates back down. But if you think the rate war is over, you are walking straight into a trap. As of today, April 9th, the national average for a 30-year fixed mortgage has dipped to 6.4%, giving some relief to buyers who were staring at nearly 7% just 2 weeks ago. This sudden drop was triggered by a 2-week ceasefire deal in the Middle East that caused oil prices to pull back in the 10-year Treasury yield to settle near 4.3%. However, the under-the-hood data tells a much more dangerous story. The ceasefire is already being called fragile by international monitors, and oil tankers are still being threatened in the Strait of Hormuz. The Federal Reserve released minutes from their latest meeting this morning. A growing number of policymakers are actually talking about raising rates again if inflation doesn't cool off fast. We also have a massive CPI inflation report coming out tomorrow, which many experts believe will show that energy prices have pushed inflation back to a 2-year high. What this means for you is that the rate dip we are seeing today is likely a temporary window of opportunity that could disappear by Monday morning. While the market is distracted by the ceasefire news, smart buyers are locking in these lower 6.4% rates before the inflation data hits the fan. If you wait for the perfect piece to buy a home, you're going to be competing with millions of other buyers who are all going to jump back into the market at the same time. Don't let a temporary headline dictate your long-term wealth. Let's look at your numbers today while this small window is still open.